Hello everyone, welcome back to Believer Science Academy. This is topic of the day. Today we'll discuss recent changes to GST, that is GST 2.0, and what are the important provisions, how it is going to impact different sectors, and who are the winners or beneficiaries and who are the losers in GST 2.0. So, what are the key takeaways of GST 2.0? It brought certain structural reforms. What are the structural reforms? It shifted from 4 slab to 3 slab, from the previous 5%, 2%, 18% and 28% to current 5%, 18% and only 40%. In the 40% are those goods which are called as sin goods or demerit goods or luxury goods, and in 18% is the standard rate, and the 5% is normally for consumable goods. So, this simplification aligns with global best practices, which improves predictability and lowers compliance burden. The one of the major aspect of this GST revamp is to bring citizen-centric relief. So, the essentials like milk, paneer, chapati, paratha are exempted from taxes. Now they have been included in 0% tax slab. And daily use goods such as soap, toothpaste, bicycle, kitchenware, etc. are kept in 5% bracket. Next, packaged foods, chocolates, noodles, beverages, rate cuts have been provided here to bring boost in consumption. Next is insurance, especially with life and health. GST fully exempted in insurances, which will increase affordability and will also increase penetration of insurance in India. Next, with respect to healthcare, the essential drugs, devices for cancer, rare diseases, chronic conditions are exempted or reduced, which is going to bring wider access and reduced financial stress. Also, one of the major outcome or major targeted group in GST 2.0 is farmers. Support to farmers and labor intensive sectors. What with the farmers? Tractors, machinery are at only 5% now. They have been reduced from previously 18% tax rate. Fertilizers inputs like sulfuric acid, ammonia had moved from 18% to 5%. Next, the labor intensive industries such as handicrafts, marble, granite, leather reduce the rates to boost employment and demand. So you can see a pattern here. The focus is not on GST collection, rather focus is on demand driven development, demand driven, consumption driven development. Okay. Next, critical sector rebalancing such as textile, the man-made fiber and yarn are at 5% only, corrects a long-standing inverted duty structure, and then cement is cut from 28% to 18%, which is going to boost in housing and infra. And if you are looking for a time to build a new house, this is the perfect time. Next, renewables and auto components. Lower GST and accelerates green growth. We will discuss about this automobile sector once again in the same video only in the winners and losers. Next, institutional strengthening. Very important. That is GSTAT. What is the GSTAT? It is GST Appellate Tribunal. Goods and Services Tax Appellate Tribunal to be operational by the year end, which is going to help in faster dispute resolution and taxpayer confidence. Next, other reforms include provisional refunds, risk-based compliance, harmonization of valuation rules, and finally, lower litigation and cost of doing businesses. These are the major changes in the provisions of GST 2.2. And the implementation strategy, they will be rolled out from September 22, 2025, which is going to balance revenue stability with consumer and industry relief. It shows government's responsiveness plus industry partnership in order to bring development based on the demand. Okay. Next, so we'll discuss about new GST tax rate structure and what are the goods which have been included in 0, 5 and 18%. 0% are the food staples, health essentials and basic insurance. Obviously, it is going to reduce out of pocket expenditure is going to be reduced. As a result, they will have more money at their hand for consumption. Next is 5%, which is called as a lower rate, daily use goods, FMCG, textiles, fertilizers, EVs. This is very important. EVs are again kept at 5% only, and labor intensive goods. Next, 18% is called as standard rate, Here the majority of goods and services are kept in this core slab only. Next is 40%. Here is the funny bit. Special sin as well as luxury goods, that is tobacco chewer and a person who is going to own yacht or helicopter are included in the same bracket, that is 40%. So whenever there is a tax returns with respect to GST, you can see GST, tobacco chewers and helicopter owners standing in the same line. Next, tobacco remains under 28% plus cess till the center clears compensation loans to the states, and then it will be included into 40% slab. Next, key shift in the GST rates. 0% slab is the food and daily staples, roti, paratha, chapati, paneer, and UST milk. And health and welfare like life insurance, 33, life-saving drugs, which are focusing on cancer and heart medicines and spectacles, are all included in 0% slab. And the 5% slab are daily use FMCGs. What are these? Hair oil, soap, toothpaste, shampoo, etc. Food products like namkeens, pasta, noodles. Labor intensive sectors like handicrafts, leather goods, marbles, etc. And in industrial and agricultural inputs like biopesticides, biomethanol, and fertilizer inputs. Then cement has been slashed from 25% to 18%. Textiles, EVs retained at 5%. And in the 40% sin or luxury goods, tobacco, all forms of tobacco, pan masala, gutka, bidi, zarda, chewable or unmanufactured tobacco are all included in 40% sin goods. And in the luxury goods, they have included luxury or personal use vehicles, which are 350cc motorcycles, big cars, private jets, helicopters, and yachts. So, a person aiming to own a Royal Enfield Bullet might have to empty his pocket nowadays. Next, we'll discuss what are the key sectors, who are the winners and losers in this particular GST 2.0. So, first the winners. Winners will be auto sector, automobile sector. I just told you about bullet trains or Royal Enfield, sorry, not bullet trains, bullet vehicles, Royal Enfield bullet vehicles are going to be costlier. However, the rest of the vehicles, that is entry and mid segment car or bikes below 350cc are going to be cheaper. You can expect a rate cut of at least 13% points. This is mainly because of removal of GST compensation cess as well as tax reduction. And even in the high-end cars, which are more than 1200cc engines, there also you can expect rate cut of 8 to 10% points. You can ask how. They have been kept at 40%, even then how are they going to be cheaper? They are going to be cheaper because this GST compensation cess has been removed on high-end cars. Okay. Next, in pharma, medicines are more affordable, then it is also a winner. And in consumer appliances, rate cuts per the festive events, it is going to bring a demand-driven economy, as I told you before. And then renewable energy, 12% to 5% has been slashed on renewable energy goods, and EV is retained at 5% only. So you can see India's commitment in achieving nationally determined contributions for climate change. Okay. Next, the losers. Airline industries have been focusing or have been criticizing this move from the long time. You can see in the Twitter, all the airplane CEOs, etc., are slashing this GST 2.2 left and right. Why? Because the GST on non-economic class has been increased. As a result, travel cost is going to increase and air travel will become unviable. Next, small entrepreneurs. Why are the small entrepreneurs criticizing? Because of the labor charges. The labor charges have been increased from 12 to 18%, and the labor charges are increased. Who is going to pay the labor charge? Small and medium enterprises. So as a result, they are going to experience higher service cost. And textile industries, here there is 18% on garments above 2,500 rupees. Okay, so again you have to empty a pocket if you are going to buy high-end clothes as well. Next, we'll discuss the economic and fiscal impact of this GST 2.0. Revenue loss due to cuts. There will be around 48,000 crore rupees loss for government of India in 2025 based on the 23-24 consumption base. The government strategy is not about GST collection, as I told you, it is about buoyancy in tax collection. That is, it is going to bring higher compliance and it is going to bring more formalization in economy. Next is, it will bring increased consumption. That is, it compensates revenue dip. Next, what will be the benefits to common man? Cheaper cement, meaning affordable housing and infrastructure boost. Cheaper medicines, insurance, spectacles. meaning welfare and healthcare access is going to increase. Lower textile and handicraft GST, which will result in job creation and rural livelihood support. Next, just for the basics, we'll understand GST Council. What is GST Council? It is a constitutional body established under Article 279A, which was included in the Constitution under 101st Amendment Act of 2016. The composition is Union Finance Minister, who is going to be a chairperson, Union Minister of Science for Finance, Minister of State for Finance, and Finance Ministers of all the states and union territories with legislature. And the decision rule is 1 by 3rd weightage is given to center and 2 by 3rd weightage is given to the states. And for any decision to be taken, at least 75% majority is required. So, what was the GST Council role in this revamp? Largest rate rationalization since GST rollout in July 2017. Focus is on simplification and build consensus between center and state to protect both revenue as well as consumer interest. So, the broader importance of this particular GST 2.0 is for the economy, reduces classification disputes, improves business ease, boosts sectors like housing, supports consumption driven growth in a slowdown environment. We can see in the geopolitics, India is going through a tough phase at the moment. India is facing 50% tariff hike by the Trump administered USA government, which is going to make Indian exports very costlier, which is going to help, which is going to result in loss of revenue for Indian exporters. So we are going to build a domestic demand driven economy. Instead of exporting to other countries, now we can sell in our own country and bring more economy. Next is for common citizens, daily use goods are becoming cheaper, which is going to provide relief in inflationary times. Healthcare and insurance affordability is increased. Then electronic vehicle push aligns with climate commitments. So for states, compensation loans will be cleared, smoother center-state fiscal relations will improve, and flexibility for high revenue via luxury and sale goods. For tax system, GST is inching towards the global practice, that is, two slabs plus sin tax. Bring India closer to a good and simple tax vision rather than complex GST. Why this reform is important? It is going to bring structural shift, that is from 4 to 3 active slabs, equity, that is progressive taxation, luxurious in goods tax higher and essential at a lower. Welfare state, focus on health, agriculture and labor intensive sectors, revenue neutrality, that is balances welfare goals with fiscal stability, and political consensus, which shows federal cooperation in the taxation policy. So this is everything you need to know about GST 2.0. It is going to be very important for your upcoming prelims as well as upcoming mains. So note all the important topics, note important points which are told in this particular video. So if you like the video, then please hit the like button, comment on it, and also share with your friends. And if you want any other topics to be discussed, write down in the comment box and we can bring a topic or a video on that particular topic. With this, I will end the video. Jai Hind.